you're used to doing your forecasting and budgeting, looking at your financial statements or whatever it is on an Excel. How does it actually look like when you go into the system? And I left it off here where it says balance sheet and revenue expenses. And now I'm actually going to go into the revenue expenses and give you a look and feel of what the sheet actually looks like. So now I'm loading up the revenue expense sheets, and this is probably something familiar to you. It's really just a naming convention. You can name it whatever you want. Actually, these sheets are all custom named as part of the project I was working on. But you can call it income statements. Some may call it operating statements or whatnot. And the objective of this is just, it really is basically a financial statement that you can look at. Let's try to zoom out a little bit so we can see more data. So we just expanded this. This pretty much looks and feels like a financial statement. It's built like a financial statement. And you can build this sheet whichever way you want. So if you don't have necessarily, you may be in a service industry, you don't necessarily have cost of goods sold, you don't need this section. Everything here is customized, so it is tailored to your business. You can build it exactly like your GL structure. And that's the point of the flexibility of these sheets, is that it's whatever applies to you, and whatever you need to see is what's going to be displayed on the screen. And I can roll this up whichever way I want. And you can see I have revenue here, and I have all my revenue accounts, and same with cost of goods sold. I go down to my operating expenses, and I'm rolling my operating expenses up as well, by personnel, by office expense, by other expense, and I'm looking at allocations from other departments. So everything is pretty much built here exactly like a financial statement would look like. You can actually import your chart of accounts. This particular software has the feature to allow you to import your departments, your cost centers, if you have different product lines, your GL structure, subsidiaries, anything that you have managed in your GL system. You can actually take an export or extract from that and import it into your system. You don't necessarily, likelihood if you're doing direct integration with one of the other systems. For example, adaptive planning has a very robust integration with NetSuite. Then yes, you would have to actually map and say, this is my adaptive planning account, this is my NetSuite account, map them so that you can click a button on my screen and drill into my financials straight in NetSuite. So there's that extent of integration. But when you're doing just, you're taking your data from one system and import it into another system, chances are you've already kind of massaged the data before you import it into the system. So chances are you have your accounts named exactly the same as what it would look like in adaptive, so you won't have to necessarily do that mapping. You also find that, for example, if I import something and all of a sudden on my GL system I have a new account, when I import it to adaptive, adaptive's going to say, well, I've never seen this account before. Can you tell me what to do with this one? So the system's actually very capable of handling exceptions, handling anything that's new. You're going to constantly change your chart of accounts, or maybe add and subtract accounts. You may have accounts you no longer really use. You may have a new expense type that you want to add to the system. Adapt's very flexible in kind of adopting that. Even in the templates that you bring out of the system to send to your users, if you choose to have users enter it on Excel as opposed to entering it directly in the system, all of that is very manageable from an adaptive environment perspective. The other part I want to draw your attention to is the timeline here. So I pretty much have everything up from January 2011 all the way to the future. So in Excel, you're gonna end up adding a lot of different months, and as you go, you're gonna keep more data. Adaptive has the flexibility of allowing you to manage this time span and say, if I only want to show this year and last year, I can actually hide the columns and say these columns are not relevant anymore. I can add 5, 6 years so that I can project, do a 5-year projection. So that's very flexible. A click of a button, you can actually modify the layout of what people can actually see on their screen. Up here is a toolbar. This toolbar is similar to what we kind of keep going back to the reference of using Excel. This toolbar is a lot like what you get in Excel. I can add, if I'm in edit mode, if I click here to go edit mode, I can start, adding a row, subtracting a row, or deleting it. I could do a variety of things like cut and paste values. I could do a lot of things that I would normally do in Excel, except if I do it here, I don't have to worry about breaking any formulas or link to another spreadsheet or to another Excel file. Over to this side, and actually the screen is a little bit kind of off on the top, but I will try to actually maximize it back out. What you will find is that over here I have versions and I have here organization. These toggles basically allow you to look at, okay, I'm going to keep a budget version, I'm going to keep my board approved budget. So at the beginning of the year or at the end of this fiscal year, I'm going to put out a budget and the board's going to approve this budget and say, this is your budget for next year. This is locked, I can't touch this, nobody can do anything with it. I start with that budget. Now, come the end of quarter one of the fiscal year, now I need to look at my actuals and say I have to do a revision to my forecast. I can create different versions from this system and actually load them up and look at the different views. So I can simply switch from actuals to my board approved budget and then go from board approved budget to my forecast. And I can see gradually how that changed over time. Was my board approved budget realistic? Well, no, it's not realistic because now I have 3 months of actuals and my actuals tell me my expenses are way too high or my sales are not there. I can easily see that picture just from looking at it, flipping back and forth in the sheet. Now, of course, I mentioned there are reports that I can actually run to do that. But as I'm going through this forecast process, if I'm looking at my numbers I want to compare to what I was looking at, I may not necessarily want to walk around a piece of paper that says, oh, this is what my budget would look like. Oh, try to compare the numbers. I can just toggle that very easily. The same with organizations, and this is more for people that, like for us accountants managing department budgets. I don't have to worry about sending you, marketing department one template, sending IT department another template. I can manage the different department inputs straight from this drop-down box here. This drop-down box has a roll-up of my entire organization, so if I click on any of this, or I just click on accounting, it will switch to all the numbers that accounting is input. And you notice how this sheet immediately changed as well because accounting doesn't necessarily look at, like the accounting department doesn't necessarily budget the balance sheet. Yes, they do budget the process of the balance sheet, but oftentimes your balance sheet are not department-based. So it's irrelevant to the accounting department when I do the budget process. And you can see that sheet is no longer here. So as I switch between departments, I can pull up information that's relevant to that department, and I can also see the most updated number. Whoever last input the numbers on there, as soon as I pull up their expenses, I can immediately see that. As soon as I click on expense, it looks very similar to what I was looking at before, except now I don't see my revenue, I don't see my cost of goods sold, because I'm looking at operating expenses. You see how this exact same look and feel of the sheet just dynamically shifted based on what the department is. It pulls up accounts that are relevant to them. And all these numbers here, you notice that some of them are in green, some of them are in black. Green numbers represent actuals, and black numbers represent forecasted numbers. So your users don't have to worry about, which one's actual, which one's forecast. In fact, as a matter of fact, I can't even change any of these numbers because they're actuals. But if I click here, I can actually play around with this formula, whereas here, I can't click on this. I can come here and change the numbers. So that's another feature that, from a usability perspective, what you'll find with Adaptive is that everything is color-coded. If you change a number, it goes from black to blue. It gives you all that visibility as to what is being done. These white cells here tells you that these numbers can be changed. So I can easily come in here and override any of these numbers. Yes, there are formulas, and you can see that there's a formula wizard that's kind of pointing towards another particular account. So I'm pulling expenses from another account, but I can easily override that as a user if I want. It's not going to impact the entire business because the master formula is still stored with the system. But if a user for this particular version of the forecast and say, I don't want to look particular. I may, want to change this number on the fly. I don't have to worry about going back to my model because sometimes businesses have to forecast at different levels. You can go as top level as you want and just put in numbers onto a balance sheet and say, oh, you know, put a number on your napkin and say my salary expenses could be $50,000, my office expenses could be $10,000. I can do it at that level and just punch in a bunch of numbers. Or it can go into this detail as I want, which I can build sheets and say, based on my hiring schedule, this is how much my personnel expenses should be. So this is what I want to put onto my income statement. You can do it as granular as you want, or you can do it as top level as you want. And depending on how your user is, depending on how big your organization is, of course you may find costs and benefits to both. But this system allows you to actually handle any of these circumstances. Here I have all these blank cells, so I'm going to kind of just walk through how this process works. How do I, as a user, I'm the accounting manager here, trying to forecast the accounting expenses for the month or for the year. We're 3 months into the year right now, and I am actually trying to figure out, okay, I may actually have some new expenses. I may actually have more postage. Well, my AR has been behind. I need to send out a bunch of statements to my clients. I'm going to have to incur some postage expense for the last 3 months to catch up. So I think I'm going to generate another $50 in postage expense. What can I do? I can just come in here and type in numbers. I can say, okay, I want $50 here, $50 here, and $50 here. And notice how, like I said, the numbers change into blue. That's because it acknowledges the fact that I've just made an input to this sheet. So my numbers are no longer the same. But what if I don't know how I'm going to be spending $50 each month? What if I just know for this quarter I'm going to be spending $200 on something? So hypothetically speaking, let's say I don't. Maybe accounting department has an advertising campaign they want to do, and you want to charge that back to them, and they want to talk about how great the CGAs are, and they want to do with them like they want to do a campaign for that. Okay, so I don't know when it's going to happen. I don't know which month it's going to be. I know it's going to be maybe a $5,000 campaign. I know it's going to be quarter two. So what can I do? I can come in here to the quarter two cell and I can enter in $5,000. It's going to ask me, how do I want to allocate this $5,000? I can actually allocate a variety of different ways in Adaptive, just out of the box. I can break it back proportionally. I can even look at prior year's trends. So I can say, last year I spent 25%, 25%, 50%. So this year allocated the same way. I can do 4, 4, 5. I can do a variety of ways, just so that you can actually look at the numbers and say, if I don't really know at a high level, I just know this quarter. Okay, you know what? Use last year's trend. This is easily manageable by the users. They don't even have to think about what they need to, where they need to go. They can just click a button, enter in their numbers, and off they go. I can also drive this, like I said, based on formulas. So if I want to come in here and say the rent, I want to open up Formula Wizard. Excel formula wizards, everybody's like, how do I do a VLOOKUP formulas? How do I do this formula? How do I do that formula? They really make it as simple as possible and user-friendly. And I keep stressing user-friendliness because Adaptive is just so intuitive for users that you can easily just come in here and say, I need to add 2 accounts together. I need to add my AR. I can click this. Basically, you can actually just click on this on any account, and then you can basically click a button and add it. And then I can do the same thing. I can click on these buttons and add and subtract accounts if I want. So pretty much all you're doing is you're clicking the buttons here and there, and you can string a whole bunch of formulas together and say, add these 5 accounts together and give me this number. It's pretty much, I would think it's easier to look at and easier to see than Excel. Excel, you're always looking at cells. You're not even looking at, you have to know what cell D5 is in order for me to actually come up with a formula. Whereas here, I can select the accounts that I actually want and add up the numbers together. Here, there's a notes section that you can actually enter in user-defined notes, and notes would store on your particular sheet, so that when you try to reference back and say why is this number there, the notes would pop up and tell you, oh, it's because of marketing expense that I'm planning to spend. You can also create assumptions, global assumptions, and you can actually say, oh, I created an assumption that my marketing campaigns are going to be, I'm going to spend 10% every month for the first 10 months. You can actually create that as an assumption and allocate that over 10 months. Create that as a global assumption, and then store that under your assumption so that you can reference to a cell that says, look at my assumption for marketing expense, and look at my assumption for marketing campaign, and go there and pull that number for me. So you can store your information in a variety of ways. The notes section is meant for storing user notes, so as you're entering information, you can actually reflect back and say, why did I put that number to begin with? So if I actually type in here, let's say I type in here and I just put S. I can actually add a cell-specific note, and I can say refer to test note.
Are you going to show the assumptions as well later, or do you want to finish?
I can say refer to something, refer to this particular cell, and I can come here and I can read the notes, right? What you'll find with this particular program is you can actually store a lot of settings to whichever degree that you want people to see or people not to see. So if the person has access to this, chances are they'll probably be able to see the notes as well. But a lot of the security feature in this particular program allows you to control who can actually see the notes. Of course, if you're accounting, you likely want to see their assumptions, but you may not necessarily want IT to know why you're spending $10,000 for a marketing campaign. If they don't have access to that information, then they won't be able to see that information. And the other part, to answer your question about the marketing campaign, for example, the other thing I can do with marketing campaign is I can actually create a split, what that allows me to do is, I know that I have 5 marketing campaigns this year. I don't just want to know the marketing expense number or the advertising number. I want to know what these 5 campaigns are. I can actually split this cell into 5 or 6 or however many that you need and say, and tell me each of the marketing campaign that's going to happen and how much it's going to cost, and have that roll up into my advertising number. And that number only applies to my department and it won't affect anybody else. So if you're worried that when users are all of a sudden, you send them Excel templates and they start adding cells, subtracting cells, deleting columns and rows, and it all of a sudden screws up your Excel template because they have some idea of what they're doing but they don't really know, what this software allows you to do is protect all of that by giving you that, the nodes, the splits, in order to actually for them to put their assumptions down. We just briefly kind of touch upon this is what, this sheet here in the adaptive world is called the basic sheet. And the reason why it's called basic sheet is because it allows you to forecast at the highest level possible. So if I want to just put in numbers and say $500 here, $10,000 there, it's as easy to come in a sheet and just punch in numbers into the cells, of course the white cells or the blue cells, but not the gray ones. But what if I want to actually forecast my personnel expenses? My personnel expenses, I have headcounts, and I manage my headcounts. What do I do? Well, in adaptive, there are different kinds of sheets, and depending on what level you want to forecast it at, you could create a huge model that actually supports those numbers. What I did was I came to this personnel sheet, and this personnel sheet here, it basically tells you the head count and the forecast of the year of how I'm going to be hiring my people and what they're going to be paid. Now, of course, the biggest question, ding, 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 the biggest question accounting people are going to ask is, I don't want everybody to see my salary information. This is absolute confidential information, right? Not unless you have access to doing the forecast, or your HR, you shouldn't, or the manager, you shouldn't see this information. Adaptive is very smart in the sense that it takes that into account. You can actually set certain account as salary information account, and on a user by user level, you can actually specify and say, do they have access to payroll, do they have access to salary information? So the 2 managers, one can be, both are accounting managers, one have direct report and the other one doesn't. You can actually pretty much say, the person that doesn't actually have headcounts or anybody can't see salary information and the other one can. So you can specify to that level of detail to say who actually has salary access. I'm just going to jump back here for a second because I want everyone to remember some numbers. And I know you may have already spent a whole day looking at numbers, so I'll try to make these numbers as simple as possible. So we're looking at here $35,800 for April 2012 and $28,000 for salary expenses. So this is how much I'm thinking of coming in. Of course, I mean, if I come here and change the number, it's no fun. I mean, what's the point in that magic trick, right? So I'm going to come in here in the personnel sheet, and I'm going to say, okay, this is my headcount for accounting department. I have all these employees here. I have 1, 2, 3, 4, 5, 6 employees and a 7 that I just added yesterday, but I'm going to add an 8th employee this time. So what I'm going to do is I'm actually going to add an 8th employee, and I'm going to say, you know, maybe his name is Bob Smith. We just hired a CFO here, as you can see, employee number 37 is the CFO, but we still don't have a controller, so I'm going to actually hire a controller today. Oh, I came into this particular portion, and it gives me a drop-down menu. These model sheets are so precise that it even prevents users from entering wrong data. The statement of problems may be important in the sense that it might drive your payroll calculation, or payroll tax calculation. It may be as important as driving, you know, certain expenses. Maybe they have GST, PST, or whatever tax rate, different tax rate in different places. And you may not want the user, if you're in Excel, you probably have to say, if province is ON, do this. Well, but what if the user types in ONT or type in the word Ontario? Well, then your whole formulas, you're going to get a formula error. That's what happens in Excel. But here, I can actually make sure that the users are only allowed to pick from a drop-down list. So I can't start typing New York. I will have to select NY to know that, okay, I'm going to be making the right decision. Why is the start date relevant, you ask? Well, the start date is relevant because if I hire someone for a year, I may not pick up that employee until April. I may not pick up that employee until July. How do I actually forecast my, or budget my salary expenses if I hire that employee partway through the year? Well, if you enter a start date here, the formula is going to pick up and say, and know that and realize your employee is not starting until a certain period of time. So for the purpose of this particular demo, I'm actually going to put in May just to demonstrate this, particular. And the reason why I'm using 2012 is because this model was kind of built to the data of 2012, so that's why you see the number that way, even though we're in 2014 at this point. So don't worry about that. What you find also here is that I actually have here E and NE, and then I have different numbers. Well, sometimes you have contractors. You don't pay them an annual salary. Sometimes you have you have hourly staff versus your annual staff. Well, you don't want them to use the same formula if you're calculating hourly wages versus your annual salary. But if I can build the logic in the system so that I can say, if it says employee, if it says E, then take their number and divide by 12 for each month. Whereas if I'm an hourly staff, take the number, multiply it by 40 and multiply it by 4 to get the monthly number, or 5 for a particular week, right? So I can build all that logic in the model, and once I build this, I don't have to worry about this going forward. I don't have to try to rebuild this again next year. Once it's done, it's done. The logic will be there until I change my assumptions, of course. If all of a sudden I actually manage my business differently and I don't hire, hourly staff anymore, I pay them, I pay them overtime, then I have to change my calculation. For the purpose of this particular example, I'm just going to pay the same amount just to kind of demonstrate my point about numbers. So I added an employee here, and I'm going to save this. Does anybody remember the numbers that we're looking at from the previous expenses? Anybody?
28,000.
Right, it's 28,000. So let's see if our numbers have changed ever since. My main number now is 37,078. So my April still stayed the same. Just because I added an employee doesn't mean that all my numbers are all of a sudden going to add up. Because I specifically said the person is starting on May 1st. So my April number should never have to change because that person hasn't started in April. When I built this budgeting model out, I can state all these assumptions and state all these calculations into the model so that at a click of a button, all I have to do is just, as a manager or business manager, I just have to add the employee's name and the relevant information, and my entire model will get updated automatically. Even my payroll tax calculation, benefits calculations are automatically updated based on the new assumptions that I've just entered. And if I want to scroll down here, my facility allocation has just gone up as well. Why has the facility allocation just gone up? Because I have actually put in a logic that says, allocate my facility expenses based on headcount. And because in May, I now have an additional employee, my allocation from facilities are going to go up. Naturally, everything ties in the system just as long as you define the logic and say, this is how I want to forecast. And this is the result you're going to get. You don't have to worry about people going in there and breaking formulas and whatnot. I didn't break anything. I didn't go in there and change any of your budget, your budgeting template. All I did was just went in there and add a row, right? The next thing I want to actually draw your attention to is, okay, we just spent the past half hour talking about expenses, but at the end of the day, the lifeblood of the business is sales. Everyone cares about sales and revenue. That's going to be the driver of your business, and that's the majority of time you can spend with your stakeholders. You want to talk to your sales VP or directors and say, how much money you're going to bring into the business. Well, I don't like your number. Go and fix it. We want more. What does that process look like? Well, what I can do is I can actually now go into the sales department. Since I just went from accounting to sales, now my tabs all of a sudden changed because I actually have revenue and cost of goods sold planning. I'm the sales department, so I obviously am concerned about how much dollars we're going to generate and how much cost it is to produce units, since I'm in a business that is manufacturing products. So I'm going to come in here and go to the revenue and cost of goods sold planning. What you'll see is a sheet that looks kind of similar to the first one, except all the GL accounts aren't there. Because salespeople, I don't know if you guys know, I've worked with a lot of salespeople, they don't really understand accounting GL numbers. They don't really care about accounting GL, so why even show them accounting numbers? Let's just show them what they need to see. How many units you're going to sell, how much do you plan on selling them at, and tell me how much it's going to cost. I put in all this information here, and I can now actually automatically calculate the revenue and cost of goods sold just from all this, just from entering that information. My numbers here are all planned numbers based on a roll-up of a very complex business. Before I kind of jump into that piece, what I wanted to kind of talk about is what this cube sheet, this is actually called a cube sheet, which is different from the first two we spoke about, in the sense that as a business, I may have to look at a variety of factors. If I'm in the sales department, I care about geography, because if I'm selling in Europe, it's going to be different than selling in Canada, different than selling in the United States. We all know prices in the States versus prices in Canada. Canada are completely different. So that actually takes into account in my forecasting model. Same with product lines. If I have 3 different product lines, I sell here, I sell, I'm here in a widget organization that sells fasteners, springs, and switches. I have all these variables that I'm forecasting, and I can forecast as many variables as I want. I can build that all into a model because this is a cube sheet, and the cube by default is I can take in multiple variables and actually look at them in many dimensions. And the word dimensions actually, no pun intended, is the actual word to describe the different product lines we set up. Or if I have different business channels, if I sell something by reseller versus by distributors versus direct sales, I may want to do that. I may want to look at geographic region. I may want to look at a variety of factors. In this adaptive planning environment, it is called dimensions. I can look at it in as many dimensions as I want, and I can have as many values as I want. Chances are you won't be able to exhaust all of it, right? Because you may have 10, 20 product lines, but you're not going to have 5,000 product lines because it's just not going to get there, right? However, you can actually forecast it to that degree if your business really takes that into account. So I'm going to switch here. I'm going to say, I want to look at my sales for EMEA, which is Europe. These numbers here, they look a little bit different. Why do they look a bit different? Well, because in Europe I sell in euros. I don't sell in US dollars. I don't sell in Canadian dollars. So I forecast my sales based off of euro. Well, if I forecast based off euro and my consolidated forecast is in Canadian, how am I going to make them tie? Well, adaptive planning actually ties all that together for you seamlessly. There's a multi-currency feature in adaptive planning that takes that into account. You can put in your assumption for the rate that you're going to be converting for each month, and say my sales will be converting at 1.76 exchange rate. Put that in, and Adaptive automatically takes this number, and when you consolidate into your Canadian financial statement, it will say the right numbers. So taking that into account, Adaptive is very capable of also handling multi-subsidiaries or multiple entities, businesses as well. It's very scalable, so if you start acquiring a business out in the US, and you go to Europe and acquire something, and maybe you go to Asia, Japan, and acquire something else. When you start building all these businesses, all you really need to do is just go in there and set up an additional organizational structure, or set up another dimension in Adaptive, and then set up their currency and say, I'm dealing with them in Japanese yen, or I'm dealing with them in euro, or whichever currency it is, and then specify the exchange rate that you want to forecast it at. All of that's done. The numbers you punch in there, it will automatically translate properly. I can also forecast by different products. So if I come in here and I say I want to forecast by I want to forecast my fastener sales, I come in here to a specific level. So now these numbers have turned white. The reason why is because I've gone down to the lowest level that I want to forecast. I'm forecasting specifically my fastener sales in Europe. So I can actually go as detailed as I want by product, by location, or I can roll it up and forecast at a higher level. It's entirely up to you. You can configure it whichever you want. This is as flexible as the system can get. And if I change any of these numbers here, again, the revenue number on your financial statements are going to get updated. When your financial statements get updated, your income gets updated. Then, of course, your balance sheet, your net income is going to change. All that's going to roll to your cash flow statement. Your cash flow statement is going to then get updated. So all of that ties seamlessly together within one environment because of all these formulas in the same software. And anybody, if I'm a sales department, I change a number here, I have to, of course, go through the approval process and say, the VP of Finance has to approve the sales numbers before it can go through. So you don't have to worry about someone just changing something and all of a sudden, oh, why did my numbers just change? Well, nobody can do that without proper approval process. I'm going to quickly go to capital just because capital is something that everybody's kind of look at, and capital has so many aspects to it. Everyone's concerned about depreciation because when I acquire a new asset, not only am I looking at my balance sheet, all of a sudden my plant, property, equipment has increased numbers, I now have to worry about my depreciation schedule. Well, I have different classes of assets, and each class amortizes at a different rate. Sometimes I may have to amortize it by declining balance versus straight line, and if it's straight line, well, how many years of useful life am I looking at? All of that I can actually build it into my model. So let's just look at here quickly. I have here a capital spending. I have furniture, software, and leasehold. And I'm basically saying 7 years, 3 years, 20 years of useful life. And I can enter these numbers at any time of the year, and I can pretty much define where I'm going to spend my money, when I'm going to spend it. And based off of that, I'll be calculating depreciation expenses into my depreciation schedule. So my capital sheet actually ties to my depreciation schedule, generating the appropriate accounting impact, rolling it into my cumulative depreciation and my depreciation expense. So all of that is being managed by one system, and at a click of a button. I don't have to build a huge Excel model and add 10 lines for each asset that I've purchased. I can look at it by class, I can look at it by asset if I want, but all I really need to worry about is defining the assumptions like useful life and when I'm spending the money. But I'm going to show you something that makes you go, wow, you can really do that? And this is where we're going to go with the reporting engine. We talked about at the beginning of the presentation here that you're looking at you're looking at your Excel models, and oftentimes before you even send out an Excel report, you have to copy and paste values before you send it out, right? Like that's to what extent that you have to prepare these reports. Every week when you have all these formulas linked together or something, your P&L on an Excel file, then you copy and paste values and send it to somebody. Well, here you don't have to worry about doing that because the reporting engine takes care of that. In fact, the reporting engine will allow you to create so much stuff. I can create matrix type of reports that pull my actuals, my forecasts, my budget, and compare all three together. Compare across a whole year. If I want, I can compare in many dimensions. As many dimensions as I want. That's why it's called a matrix, because I can compare a variety of factors at the same time. But then I can also look at the models that I built. You know, if I want to actually print off the personnel model that I've created, you know, the one that we were just putting in the new controller that we hired. Well, if the CFO wants to look at a list of all the employees that you say you're budgeting to hire, you don't want to tell the CFO to go look at the sheet. You want to you want to create a report for that CFO to look at it directly. Well, here you go. You click a button, prepare that in a report format, and send it to your CFO or your board of directors so that they can see the level of detail of your forecast model. There are also transactions. So one of the features that you can purchase along with your adaptive planning module is it's an add-on that allows you to actually import transaction details. So in addition to just saying, oh, my number from QuickBooks is $50,000, or from SAP is $50,000, I can actually say the $50,000 made on $20,000 this, $10,000 that, and $20,000 is something else. I can actually make those entries and put them into the adaptive to support that number. So that when the marketing manager wants to go in and figure out, okay, why is it $50,000? Well, these are the 3 advertising campaigns you just spent. Here are the numbers. So adaptive also allows you to do that. It's not going to post your journal entries for you, but it will give you the ability to roll up your numbers and say, show me the numbers, the details behind this particular number. I can also build patterns like, you know, I want to see trends, I want to see graphs, I want to, you know, executives want to do that. That's easily manageable. I want to build a report book, the one that we mentioned at the beginning of the meeting, that if I want to pull my balance sheet, income statement, cash flow statement, and a fancy graph all into one package, I can easily do that and click on the button. I can also upload any files that I want. So for example, that dashboard instruction page I showed you at the beginning, I can upload a piece of paper or, you know, a Word document that says this is how you use the forecasting model, upload it on the first page of the screen and let the user drive the behavior that way. So I can do that by uploading files into the system. And that's pretty much what all the reports that you would like to build, you can actually easily start to see what kind of flexibility you have. But what I'm going to do is I'm actually going to pull up one of these reports so that you can see to what extent you can really customize these reports. As you can kind of tell, this looks and feel like Windows Explorer. Just like your cells or your sheets look like Microsoft Excel, they kind of really want you to feel at home. They want you to feel like this is something that you've used before. So that's why all these folders, drag and drop, all of that is really tailored to users, day-to-day users that look at a Windows computer all the time. And of course, I'm going to come in here now at this time, and I'm going to, let's say, I'm going to pull up my balance sheet. I just pulled up my balance sheet. You can see here, all my accounts roll up. I can build the roll up out of the box, and I can say, oh, I want to show all my accounts grouped in a certain way. I can expand and collapse all my accounts. And then of course, anything here, you can see my mouse. As soon as I point my mouse over here, it becomes something I can click. What happens if I click on this? When I click on this, it opens this number up and shows me all the numbers that make up that number. So on any of these reports that you build in Adaptive, you can easily drill into the numbers and find out more details about them. You can also see the audit trail, who has changed what, who has added what numbers. You can see all of that in a matter of a click. I don't think Excel is very capable of doing that, but you know, if you actually see an Excel version that can do that, feel free to let me know. You can also see here, I have color code. So this here is in blue, this here is in white. If you build a really fancy board report that shows certain numbers in red and then you bold certain numbers, if it's the percentage, if it's over 5%, you make it glow red. If it's less than between 0 and 5, you make it yellow. You can do a variety of things in Excel that you have to manually click and format each time. You don't have to do that here because you can actually build the report, specifically have this layout and say, I want these numbers to highlight in blue. I want to do a bunch of fancy stuff in the reporting template, and then every time you run the report, it will show you the same thing. So you don't have to worry about formatting. That's definitely something that this is very capable of handling. And I said again, I can do any roll-up and collapse that I want to do. Now, how do I do this on the back end? I want to just show you very quickly before I can. Even though I talk about the exporting features, but what's going to really stun you is the fact that when I modify the report, I don't have to be a guru in report writing. I don't have to know SQL to write a report in the adaptive planning. I don't actually have to know any programming. I don't even have to know any what these codes are behind it. All I get is a drag and drop features that allow me to take anything on this side. So I spoke about dimensions, we talked about accounts. I have different types of accounts. I can have GL accounts, I can have accounts that are just simply measuring metrics, like my gross profit margin, for example. I can talk about model accounts, the stuff like personnel, salaries, and all that. I can go on and on about these assumptions that we spoke about earlier in the meeting. I can take any of that and pull them, simply drag and drop them into a particular section of the report. So if I want to come in here and I want to take these and I want to drag it somewhere, I can drag it down here and it will add this particular account to this particular segment. I can also do a variety of things, like I can organize my time. You see here I have January, February, March. I have a variety of things here. I can actually, just say, show me a quarter to date, or if I don't want to see quarter to date, I only want to see year to date, I can easily modify that whichever way I want to see the report. It's as easy as just clicking this open, quarter to date, drag it there, and it will actually add an additional column to this particular report. I can also organize my actuals versus budget. We kind of briefly mentioned that the engine allows me to do that. So if I want to add another layer, a version, and I want to say, oh, I want to actually look at my board-approved budget, so I can actually drag that here. I can actually drag a variety of things if I really want to. I'm just going to try to actually zoom out just so everyone can see. Well, I don't think I can actually zoom out anymore. It's harder to see on the projector screen, but the idea is that I can drag and drop any field or any measurement that I want and put them onto the report. The other thing is I can actually define all the segments I want. So you can see here I group my assets and liabilities. I can group anything I want and I can segment them into different parts. So whichever way you build your normal reports, day-to-day report, if you have this very specific format that the board wants to see, all you really have to do is just come in here, drag a whole bunch of stuff together, preview it. If you don't like it, come back here, redrag, and drag something else on here. All you can do is just play around the screen, this user interface that is very user-friendly. You don't have to know any code. You don't have to go to your IT team and say, can you rebuild this report for me? You don't have to worry about that. And that's the really core benefit of the reporting engine to the extent of how you can modify these things from a formatting perspective. And of course, how you want to measure. If you want to put a filter on the report, I can easily just drag that filter and say, I want to look at versions, so I drag something here to look at my different versions. So this is the reporting capability of Adaptive. And reporting is only one aspect of the output. Aside from reporting, I can also show people dashboards. I can show people charts. I can create this as a graph. I can create any report as a graph. And what I can do with a graph is, after I create a graph, I can actually display it on their home screen. So let me go back here and let me just quickly show you what I'm going to do. What I want to show here is that if I come back to the dashboard and I come to this chart section, so I can actually get a variety of different graphs on here. And if you notice, I point my mouse over, it actually pops up a message that says, what is this number made out of? I can click on any of these, and again, it will show me that little pop-up screen with the drill down. So one of the benefit of this dashboard is that it's highly interactive. It is entirely up to you what you want to put on here. You can put up to 9 graphs if you want. I can look at a line graph. I can look at a pie chart revenue by product. I can look at different, a bar graph. So this is just kind of a look and a feel of what you can see on a dashboard. Now, of course, dashboard is really meant just for someone logging into the system and they want to get a very quick view of how their business is doing. But if they really want insight to their business, Adaptive has an additional layer called Adaptive Discovery, which is the business intelligence tool that drives the reporting capability behind it. So what this Adaptive Discovery actually does, the Adaptive Discovery is a BI feature which, on top of all those graphs and charts you just saw, I can do things like scorecards. I don't know how many of you have used scorecards for your businesses, but I came from a business where we actually have to periodically on a monthly basis send out corporate scorecards with a whole bunch of different gauges going up, going down, with arrows pointing all sorts of directions. So that's what actually the company scorecards, the Adaptive Discovery feature allows you to do in addition to just graphs and charts and gauges. I can also create a scorecard for any particular executives. There's no data here. What am I going to do if there's no data? Well, it's probably because I'm not running in the right time period. So I'm going to click this open, and this interactive feature just pops up. I can actually very dynamically select which period that I want to look at. So if I want to scroll back here, and I did mention we're still 2012 in terms of data. So if I come back here and select December 2012, and I click on that, all of a sudden this all gets refreshed. And I can see that, I have a scorecard here that says, all my numbers, my actual plan variance, arrows pointing up and down in different color, and if I put my mouse over it, it tells me exactly what's there. Everything is here so interactively that any user can just drill into this number and say, why is it red? Why are we doing so bad? You can easily go in there and find out what's going on in your business. That's the power of this discovery tool that allows users to actually go into actually at a very granular level understand their business. So I kind of quickly walk through the pretty much the robust reporting feature of what you might want to know from a reporting capability. So we talked about today, we talked about the planning aspect of the business and how you can create your budgeting model, create your income statements, your financials, how you can build the numbers behind it. And then now we talk about the output side of things. How do I show these numbers to an executive, to a VP or manager, or create a package or a board or to the board? So everything in your forecast cycle from beginning to end, from the process of us creating the templates for the users to actually going to the business, getting their input, going back and forth on these numbers, to the point that we approve the budget, getting the numbers finalized and generating reports. The entire budgeting cycle here today can be managed seamlessly in this environment. It's so collaborative that everybody can log into the system and actually use this feature so that you don't have to worry about people using different versions controls, managing 7 or 8 spreadsheets all in one system. That's really the message I want to kind of bring across today, just from someone that has been in this business, doing forecasting as a financial analyst for 5 years, the pain I've gone through as an analyst, working with the different business areas, and I really hope today, through this demo, through this presentation, I really want to add the value as to there is the greener grass, there are better ways of actually managing your budget, and there are very colorful things that you can do with budgeting software. So now I'm going to hand it back to Curtis to wrap the presentation.
Sure. Thank you, Stephen.
Just contact Trajectory to get started. Let us be your guide to the cloud.